You know, the retailers, they've taken it about as badly as some of the travel and leisure companies. Retail has been shut down just about around the country. Gerald Storch is with us. He's our retail guy. Gerald, am I right in saying that you think that JCPenney, Macy's, Bed Bath & Beyond, Neiman Marcus, they're gone? By the time this is over, they're gone. Really?
Well, what we saw was the consumer was on fire, student body left when this virus hit. What's happened, though, is the people who are winning even more. Walmart, Target, Costco, Amazon, internet players, people saw necessities. But the people who were losing happen to be losing even worse. So those are your department stores, like some of the names you just mentioned. The apparel retailers, terrible. Stores are shuttered. People aren't thinking about buying clothes right now. Even if they bought them, where would they wear them? So we see a terrible time for these companies for a long time to come because they're not selling what customers need right now.
The retail landscape is going to look completely different when this is over because a lot of these companies, especially apparel and footwear, they're not going to come back. Things will look and feel radically different.
Look, we want to save all companies during this period. I think any stimulus is good right now, but retail is a special case. We had an Armageddon, a warfare going on in retail before the virus hit, where some companies simply were operating with antiquated models. They didn't have a strong enough e-commerce arm. They were selling products people didn't want. The malls were doing very poorly, as you know. Department stores, apparel were doing poorly. So the real question is, should we be throwing good money after bad and trying to save these companies that were headed towards extinction anyway? I think in many cases, eventually, they've drawn down the revolvers and they'll get through the next couple of months. But when the doors reopen, I don't think they're going to see the kind of traffic they even had before, because this is not where the consumer mindset will be. So these companies will be doing even worse. Given the long-term trajectory, I think it's going to be hard for them to keep refinancing their debt. So I think we're looking at an acceleration of what was already happening in this sector.
Okay, Moody's, their retail people say that retail sales in 2020 will be down 3 to 5%. That is a significant decline. Are you in line with that? Retail sales down that much in 2020?
Absolutely. For the year as a whole. I did my own analysis and took it company by company, sector by sector. I ended up with 4% down. But we don't have any idea how long this lockdown is going to continue. So that's a big question. So I had to make an assumption about that, as Moody's did. So no one really knows. The issue isn't the percent down, because what you have is a second quarter, which is way down, right? And then you have a third quarter and a fourth quarter where it's coming back. So that's what it's going to look like. I think people are going to forgive what happened during this quarter. The real issue is there's a massive mix change away from what we used to buy towards what we're going to be buying now. And even, you know, I heard the talk about Target before, and I think it was spot on. So with Target, you know, they withdrew their guidance. Why? It's not because they aren't going to see the sales. They are. I'm not worried about them. It's because they have a massive mix change going on, even within the store, away from the high margin categories like apparel and towards the lower margin categories like food and consumables. That's happening economy-wide. So the total sales for the year might be down in that 3 to 5% range Moody's estimated. My estimate was 4%, so I think we're spot on. But the mix is going to be dramatically different, and I don't think that's going to change. I think the future is going to look a lot more like what we're seeing now than what we used to see, because consumer patterns are the internet's doubling during this period, doubling its share of what's going on. Why is that? Because, look, other than food and consumables, the internet's the only place anyone's going to go. You don't go to the shopping mall now to buy a dress. The stores are closed anyway. And even the most ardent fashionista isn't going to take that kind of risk in order to get something. So that's all gone. So the internet's going to double during this period. The question is how much of that is going to keep. I think a lot of it.
Okay, got it. Gerald Storch, always good. Thank you very much, sir. Appreciate it.